Mel, everybody, I'm Cantonese Cat. Hey everybody, Cantonese Cat here. This is the monthly chart of the ticker symbol IWM. IWM is a ETF fund for that represents the Russell 2000 small cap index. So it has very much a lot of small cap stocks that are very cyclical, that are very rate sensitive, and a lot of these companies are financials. A lot of also up and coming companies are just a lot smaller cap that are more likely to accrue debt and things like that. So they're going to be a lot more rate sensitive. If the economy does well, there's when things go risk on, there's a good chance that they're gonna do very well. And if the economy sucks and they end up sucking a bunch of liquidity outside the financial system, they're not going to do very well. So to kind of summarize, I think that over the next 12 to 18 months, there's a good potential that the IWM is going to outperform the large caps that's been doing very well over the last years or so. I think that there's a good chance that the small caps are going to catch up. If anything, they're going to end up outperforming the S&P 500 or Nasdaq. And I can show you why I think that I'm getting a little bit more bullish in terms of the small caps here. I've been talking about this for quite some time. We've really been talking about it for like months and months and months. But I'm going to show you a couple of indicators here. First indicator I want to show you is the Black Cat L3, the Banker Fund Flow Trend Oscillator. This trend oscillator is supposed to tell you what the big money is doing, what the whales are doing, what the bankers are doing. And you can see that so far we've had this spell of 3 months where price just kind of gone sideways, not doing much. But you can see that the banker inflow has been very nicely increasing. So it's a little bit of a kind of like divergence over here, Price goes sideways, big money's buying. Interesting, right? Matter of fact, if you look at some of the previous examples of previous cycles in terms of what happened, let's go to 2020. You see this God candle over here in November 2020. You know what happened before this God candle happened? You have a pretty nice increase in inflow that happened for about 3 months when the price just went sideways. After this divergence of price going sideways and a pretty steady increase in inflow, big giant green candle. It's almost like it just took a dose of Viagra. Very, very happy. I'm sorry if you're underage and listen to my video. I actually sometimes a little bit inappropriate, but if you don't know what Viagra is, don't worry about it, okay, kids? So you got a big giant green candle over here. Somebody is very happy. And the rest of it is history. When you see a very, very similar thing that happened in the past, you see that there's a pretty significant inflow, especially over here. There's a pretty significant inflow over here. See, price kind of went sideways there for about 3 months, didn't it? 1, 2, 3. Yeah, a little bit of decrease in inflow here, but overall the trend is up. Guess what happens after that? Big giant green candle. Ooh, very nice. The other time that this has happened is also at this cycle over here, the cycle before that. You can see that there are candles number 1, 2, 3, and 4. Price just kind of went sideways. What were the whales doing? They were buying. There's a lot of inflow up. Even though price just kind of went sideways for 3 to 4 months, guess what happened after that? You have a gap up here. Price just went very, very happy. Matter of fact, it's kind of crazy that this gap over here that has never been filled, the gap is still open. It's a monthly gap. Not all gaps have to fill. But you can see sideways here, increase in inflow here. Big happiness happens, right? You can see these examples really over the last few cycles. And you can also see that the whales like to buy before they pump. And as price is starting to get exhausted, they really start to exit, didn't they? It looks like their bull trend over here is starting to get a little bit exhausted. The whales are exiting. I mean, down here basically is a big downtrend. But as we get down here, The blue candles are down here are basically telling you that, hey, we might have a trend reversal here. We're not having as much outflow anymore. Whales are starting to buy. It's going to turn into inflow, inflow, inflow. Sure enough, over here, turn into inflow. They look pretty smart, don't they? Now, in addition to looking at the banker fund flow oscillator, I want to show you a couple other things too. You know, I'm going to go to the Bollinger Bands. I love the Bollinger Bands. What are the Bollinger Bands telling you? When you have the Bollinger Band that includes the median, which, because this is a monthly chart, the median is going to be a 20-month moving average. When you see a 20-month moving average starting to flatten, and when it starts to up curl like that, that's usually an indicator that there could be a very, very nice monthly bull trend that can last for a while. We're starting to have that happening here. Price is also on the upper part of the Bollinger Band, which tells you that more likely this trend is going to be more bullish rather than bearish. And you can see that the 20-month moving average is really, really nicely turned from negative sloping to now positive sloping. And this positive slope looks like it has just begun. So this usually precipitates a pretty nice move for a while. The other thing to also watch out for here too, using the Bollinger Band strategy, is how do you know that price is going to go more impulsive towards one particular direction, either up or down? One very important thing to look at in the Bollinger Band is if it squeezes. And Bollinger Band squeezes when price just kind of gone sideways for a while, building up a lot of pressure. When Bollinger squeezes like that, is probably going to pop one way or another. If price is at the upper part of the Bollinger Band, and if the 20-month moving average is pointing up, most likely it's going to go in a pretty impulsive manner going up. I'll show you some examples of the previous cycles. And if the Bollinger Band is squeezing, but price is underneath right here, and if the 20-month moving average is pointing down, like over here, you see that it's squeezing over here? Yeah, that's a downtrend until it's not. Right now, we have an up-pointing 20-month moving average that's just got started for about 3 or 4 months. The Bollinger Band is expanding. As Danny says, crocodile mouth is open, ready to feed. Tongue is pointing up. It's getting happy. It might be eating a Viagra or Cialis, depending on your favorite brand. It might be eating a candle here pretty soon. Maybe over the next month or two, things could get pretty significantly bullish. Now, I almost want to say this. On the previous cycle, I really think that the bullish cycle really started around here, if COVID didn't happen. I really think that the bullish cycle started around here because you can really see that, hey, things have been flat, down a little bit, but hey, we got some pretty bullish candle over here. Maybe it was going to do a little bit of back test, or maybe it's just going to hang out right here on the upper bullish part, band part right here for a little while before going up. COVID happened, big selling, and this is the true Black Swan event. If the Fed didn't come in, if we didn't have the crazy liquidity and crazy money printing that they did, yeah, the whole cycle would have been broken. But they did what they had to do. They sustained the cycle. Price went way below the lower Bollinger Band. But because of the crazy money printing, the cycle resumes. I really thought that the cycle is really just going to look like this, right? If that's the case, you're really starting talking about the cycle. The bull cycle may have started around for example, around November 2019, and then it lasted all the way up to November 2021. This lasted about 2 years. This Black Swan event here really does make it look kind of weird, but I really think that it lasted for probably about 2 years. The previous cycle, you can see, hey, it's downtrending a little bit here and make a little bit of ABC correction if you're into the kind of elite wave kind of thing. Have the tweezer bottom over here. Have the tweezer bottom over here too. But have the tweezer bottom over here is a pretty good bottom. The candle actually close underneath the lower Bollinger Band. That's basically a telltale sign that you've bottomed. And also just how far down you are from the lower Bollinger Band. I mean, this is a great buying opportunity right down here. But you can see that it downtrended. Hey, guess what? Span months number 1, 2, 3, 4, 5. Starting uptrend here a little bit. This is the beginning of the bull cycle, right? The beginning of the bull cycle started probably around September 2016. Lasted all the way up to August 2018. 16 to 18, that's about 2 years, right? Over here, the previous cycle, it did kind of like another, kind of like a, how do you even say that? It's like a symmetrical triangle kind of Elliott wave correction. It went sideways. And the 20-month moving average also went sideways. Actually, it dipped down a little bit. Back tested a little bit here with this candle. Guess what? Over here, it started uptrend, right? Around December 2012. How long did it last? How long does bull market last? It lasts probably, I would say probably until like June 2015. Right? So over here, it lasted about 2.5 years. Over here, it lasted for about 2 years after the 20-month moving average started to curl up. It lasted for about 2 years. Over here, I would argue that if you count the uptrend here, if you don't look at the noise from COVID, which is hard to not look at, you just look at uptrend over here. The uptrend probably started around November 2019 and ended in November 2021, so about 2 years. We started this uptrend here arguably around November 2023. Probably going to last until, if I had to, my best guesstimate, probably going to last until like November 2025. Now, there's going to be a lot of people who are going to tell you that, hey, you know, it's fun, it's cute, you're looking at charts, you're looking at cycles. Are you even paying attention to what's happening right now? Inflation's coming back up again. You don't even know what you're talking about. You know, China's going through great deflation. There's a lot of risk here. I don't understand, like, how can you have inflation fears and you worry about Chinese deflation, and how do you have increased liquidity in the system with Bitcoin pumping up so much, and you worry about rates staying higher for longer because inflation is going to come back? None of this makes any sense. Like, all these narratives are conflicting with one another. People change their narrative based on convenience. People change their narratives based on what fits their bias the most. There are going to be, I've done research for a very, very long time. I don't talk about much about this, but I actually have a PhD as well. I've done research for a very long time. It's very, very easy to make an argument for grants and things like that. And that's also part of the reason why it's tough for people to actually get grants, because they can look at, if you've been experienced, been out of the field for long enough, you can look and see what the grants are saying. You can see through their crap, if you will. You can look for any kind of supportive data if you have a narrative in place, and you can really cite a lot of different sources to support your idea. But the bottom line is that they might think that I'm being cute by looking at these lines and levels and trends and cycles, but I'm just showing you what I'm seeing here. I mean, I'm just showing you what has happened time and time and time over and over and over again. And we just had a great deleveraging event that just happened literally a little more than a year ago. I don't really see any great need for the market to need to deleverage again. Small cap stocks are actually still considerably undervalued. And I still think that if you look at the 2-year yield here, which looks like a bird with two big giant ball sacks, I think it's getting weaker. And here I'm trying to show you the Ichimoku Cloud labels here, but don't worry about it. This is the Bollinger Band. The IWM, the small cap stocks, are supposed to be yield sensitive. People worry about yields getting higher for longer. The 20-month moving average is starting to roll over. It's really starting to roll over here. It's getting a little bit of, like, you know, back test here, able to break above it a little bit. Back testing and support, is it going to go higher? I don't know. Overall, it does look like the whole trend is kind of rolling over here, doesn't it? The Bollinger Bands are squeezing, is trying to pick a trend, and the next trend is going to be pretty powerful. Could it be going up? Could it be going down? Because of the deceleration of this increase here on the 20-month moving average, I really think that the trend is probably going to point up down. And when it happens, it can be a little bit powerful. I'm going to show you the Ichimoku Cloud here. It's probably bothering you looking at these labels and actually not see the cloud. If you look at Ichimoku Cloud, it gives you a couple of lines here. One is the Tenkan, the other one is the Kijin. The Tenkan line, I'm going to change that to AN. The Tenkan line here, during a bull trend, it supports the underlying trend. Service support here, service support here. Serve support here 3 times. Over here, it really looks like it's wanting to roll over. It's testing support a lot more often than it should. Tested 1, 2, 3, 4 times. Found support, bounced up. Hey, the trend is exhausting. Broke underneath of it. Back tested 3 times. This doesn't look good for rates. I think rates are probably going to end up not staying higher for longer. And I've been talking about that for quite some time. This is what I'm seeing. If you also look at the RSI here, as the rates were going up, RSI was going down, you have a pretty clear bearish divergence that I'm seeing here. I just don't believe in higher for longer. I'm sorry. Maybe there's inflation fears coming back. I don't know. But because of that, because I'm seeing rates could potentially tank down, I'm going to go back to the IWM here. I'm going to show you the Ichimoku cloud there as well. But because rates look like it's getting weaker and weaker, I think IWM is probably going to do very well. This is the Ichimoku cloud for the IWM ETF here. It did this time and time and time again. And what I'm showing you here is over the last, you've gone through cycle 1, 2, 3, right? Arguably 4 here as it bounced from the bottom of the Great Financial Crisis. What price does, and this is going to kind of shock you how accurate the Ichimoku cloud is. This is the monthly Ichimoku cloud. What happens here is that when price corrects and when it drops and it touches the cloud, the top of the cloud as support, and it bounces off of it, it just keeps on going up for like 3 years. Came back down, had a correction here, ABC, correction here, tweezer bottom, bounce from top of the cloud. Keep going up for about 2 years. Oh, down here, it didn't really bounce into the cloud. Kind of, I guess it kind of did like a little bit of ABC here if you count the, but regardless, I still think that this is still a little bit of a black swan event. I think it's very possible that this could have been ABC, and that would have been the cycle that just, would have kept going up. Didn't really quite touch the cloud over here, but close enough for me. Down here though, broke through the cloud because of COVID, because it was black swan event. Came back up. Guess what it did? Guess what it did after it broke back above the cloud? Back tested the cloud. Found support. Gave another month of a little nudge right here. Make sure that it was fine. What happens after this sidewave, the 3 months right above the cloud to make sure we got good support down in the cloud? Big giant green candle. Cialis, Viagra, your favorite brand. I don't care. It was straight up. Guess what happened over here? In 2022, broke back into the cloud. This is actually a little bit more of a bearish trend because of how bad inflation was and how the Fed has to really suck all the liquidity down. Initially, looking at here is like, hey, it's bouncing from the clouds, probably going to keep going up, and having three big negative candle over here when the big cap index has just been kind of correcting. IWM was correcting like extra. But it makes sense because it wanted to test the bottom of the cloud over here, make sure that you got a pretty good foundation over here, the Ichimoku cloud. Found support at the bottom of the cloud over here. Did a little bit of a tweezer bottom over here. Shot way up. Kind of back testing the cloud over here, and make sure that you're able to find support on the top of the Ichimoku cloud for months number 1 and 2. Found support up. Potentially up even higher. How do I know that potentially up even higher for the next month or 2? I'll show you something else too. Ichimoku cloud analysis gives you 2 lines. One is the Tenkin line, which is the red line over here. The other one is the Kijun line, which is the blue line over here. When you have the Tenkin about to cross above the Kijun, Tenkin line is leading, Kijun line is lagging. When you have the leading line crossing above the lagging line, you have a bullish cross, and that could tell you that you're going to have a pretty nice bull trend coming up pretty soon. We're about to have a bullish cross. I think we're going to get a bullish cross next month. What happened, you ask, when we had a prior bullish cross? We had a prior bullish cross right around here. it was actually crossed together with, this big giant green candle over here. What happened with the time before that? It did have a bearish cross over here because of COVID briefly for a few months. But over here, I really thought that this was really probably the beginning of the bull cycle here. The trajectory is probably going to keep going up here if COVID didn't happen. But it could have been like that. I'll show you some of the previous cycles too, right? Bullish cross over here. Went sideways for 3 months, right? I showed you that before. Bullish cross over here on this red candle. Big green candle after bullish cross happened. What happened time before that? Bullish cross. Very, very nice up. So I just want to show you like this Tenkan Kijun cross generally can precipitate a pretty nice move. Like when this cross happened, up for 3 years. When this cross happened, up for 2 years. When this cross happened, up for 2 years. Besides COVID, we're about to get a cross. Up for 2 or 3 years, potentially. I don't know. Nothing's ever guaranteed. But it's looking pretty darn good, isn't it? I'm just showing you what I see. I don't make the rules. I'm not even gonna like argue the fundamentals here because what's the point? I don't really know what to do with fundamentalists who are basing off a narrative and being absolutist about it. I don't know what to do with people who can't accept other people's opinion and be open-minded. I can see the bear case. I can see that these things don't always necessarily have to work out. But so far, I cannot argue with what I'm seeing. I suppose a black swan event can come. I do not think that recession is a black swan event because I think we had a recession here. Because I think we had a little bit of a small recession here. Maybe arguably over here too. Those are not black swan events. Those are just deleveraging as a part of normal cycle. And we have some pretty great deleveraging that already had happened, and we had a lot of accumulation sideways for closer to 1.5 to 2 years now. I think the next move up is going to be pretty powerful. When the IWM does well, it really tells you that liquidity conditions is getting very good and things are going risk on. Large caps are also probably going to do well, but small caps most likely going to do even better. So you're talking about some of the less profitable companies are going to do pretty well. This is also coinciding with with these kind of interesting things I'm seeing here, the bullish cross over here with the backtest of the Ichimoku cloud, with development of bull trends, and with the bull in Japan showing that there's a widening of bull in Japan with increasing up pointing 20-month moving average. It's very interesting. You see that together with yields kind of rolling down in it. It doesn't seem like it's a coincidence. It doesn't seem like it's a coincidence that you're seeing Ichimoku cloud resistance here to Tenkan and you're seeing yields weakening. It's also not a coincidence that you're seeing the US dollar also isn't doing very well. You have a little bit of a descending triangle here, which is a bearish pattern. There's potential for this to break down the floor and test the top of this Ichimoku cloud down here. And right now, you had a bearish cross of the US dollar, the DXY symbol. Kijun has crossed above the Tenkan. This is a bearish cross. So far, price is trying to backtest the Kijun over here. So far, it's been failing to do that. They even try to pass this descending line over here has failed to do that. There's a potential US dollar is going to keep dropping. A lot of people looking at this hammer candle here saying it's a bullish candle. This is a hanging man top as far as I'm concerned. The bulls have spent a significant amount of energy trying to push the month candle up above, but not able to push above that even further. It's right underneath the Kijun resistance. The bulls are exhausted. The US dollar bulls are exhausted. Based on what I'm seeing. Nothing's ever guaranteed. but what I'm seeing so far is relatively bullish for risk assets. And a lot of the narratives that you've been running on for the last year or two that people are going to have some inertia for may be broken down soon. I don't know. I'm just a cat male. You do what you will with this piece of information. Or educated guess, or uneducated guess. Whatever you want to do with this piece of information is up to you. Thank you for listening for about 25 minutes. Have a wonderful Wednesday. Take care. Bye.